Hello everyone, this is EVG Trader. In this video, I will show a strategy for trading binary options on Pocket Option. I will be trading on the 80 dirham yuan pair. In principle, this strategy can be applied to any asset, but since it is Saturday, I will show the scheme on it. What is the essence of the scheme? For successful trading today, I will apply three things. The first indicator that we will rely on today. To start, we go to the well-known website investing.com. In the search bar, we enter the asset we need. In our case, it will be the trading pair dirham yuan. Even though it is the weekend and OTC assets are generally unavailable on investing.com, it is still possible to indirectly rely on the analysis from the site. As you saw on the 5-minute time frame for analysis on investing.com, it is stated that the asset should be sold. Now let's analyze this specifically on the chart. Since we are trading on minute candles, it is incorrect to zoom out the chart too much. The first thing we will do is build a local trend line. We constructed it from the upper peak of the chart and through the points where it touches this line during the decline. It is important to note that we did not consider false breakouts of this line. It is important for us to understand the overall trend in this local section of the chart. Ideally, it would be best to first perform technical analysis on the TradingView website because, as you can see, it is not very convenient to build figures on Pocket Option. So, we have added the lines for support and resistance levels. Let me explain how to construct them and how to analyze the chart and price movement for their construction. Basically, what are support and resistance levels? Let's start by saying that constructing them is very simple, but despite being quite easy, it is a rather effective technique. On the chart, I drew three lines, meaning that support and resistance levels are areas where the chart touches them several times. The support level is located below. It means that buyers do not allow the price to go down, meaning they support the price. The resistance level is located above. It means that sellers do not allow the price to go up. That is, they resist the price increase. As we can see, the price has moved above the resistance level. This most likely means that the chart will bounce down, so I am opening a downward trade for 1 minute. As expected, the chart went down and the trade was successful. The resistance level works in the same way. Only in this case do the sellers unload their assets and prevent the price from going up. I also want to mention that there are false breakouts of support and resistance levels. Therefore, it is correct to build levels on a higher time frame. In general, I want to say that resistance and support lines are not actually lines, but areas. That is, it is correct to construct an area rather than lines. But in our case, this can be disregarded. What does a candle consist of? A candle consists of two elements. The first is the body of the candle, which refers to these thick rectangles. The second element, the shadow, consists of the thin lines at the bottom or top of the candle. They indicate that the price of the asset changed rapidly and was quickly bought back or sold off. You see, I still built the areas. You can see that the price is bouncing off them. The chart shows that the price has broken through the resistance level. I think it will soon be time to enter the trade. So let's wait a little longer. That is, to make sure the price has bounced and then open a trade for a decline. Basically, yes, I will go for a sell. I will speed up the video so it won't be too long. As we can see, the price did indeed go down and bounced off the resistance level. Let me explain why levels work. First, why levels work. This is the theory of big money. In any market, there are big players who hold very large positions. As in the case of our second trade, the price reached the resistance level. Here, there is a big seller who has placed a large sell order, and in the market, there are not enough participants to immediately absorb this order. Since in the area where the chart reversed, a big seller buys out all those willing to enter a purchase. Naturally, the market turns down because this big seller buys all the positions of people who entered a purchase before the resistance level. And these people who were standing in buy orders want to exit, and to exit they need to sell. Therefore, the price rebounds and goes down. It continues to go down until another big player thinks that the price has dropped to the level they need, and it's time to start buying the asset. Let's wait for this moment while the price rebounds from the support level. As we can see, the price has bounced back again and is moving upwards. I also want to draw attention to the false breakouts of the resistance and support levels. As we can see on the chart, the price broke through the support level, but it was bought back and the price went up. Why? It can generally be considered a pattern that in 70% of cases, the price rebounds after a false breakout. This false breakout, which I call the knee, is the last impulse, the push, formed by the exit of big players from the game, and therefore, there are no big players left in the market. They do not have enough funds to push the price down. As a result, it is bought back. So, let me speed up the video to wait for another false breakout of the resistance level. I also remind you that the trend is still downward, so we are trading specifically for a decline, and from the rebounds of the resistance level. I see that the price has broken the resistance level again. I will open another trade for a decrease of $500. Great. I successfully closed the trade in profit. As you can see, the strategy works. Overall, what can I say? The strategy is very simple. We just draw the support and resistance levels and the trend line. Then we trade based on the breakouts. To find out which breakouts to trade, we open and analyze investing.com, as I showed at the beginning of the video. In general, I will record a separate video about all of this. In it, I will go through several trading pairs and show with live examples how this is done. Let's speed up the video again so that the chart reaches a good entry point. So, an interesting situation. The chart has reached the previous peak level on our time frame and has also broken through a quite strong resistance level, where the chart has touched and reversed from it quite a few times. I am opening a short position. Another trade was successful. We have already secured 4 wins without video cuts. Let me find an entry point for the last trade. I think 5 wins on Saturday would be pretty cool and enjoyable. As we can see, the situation is exactly the same. One could say it's a copy. Once again, the market breaks through the resistance level at our time frame. Let's see if the pattern works. I am opening the last trade for a decline. Fire. The last trade was also profitable. I earned $2,000 during the trading session. Here is the video I created. It's unedited. With clips, you could say it's live trading. I also want to remind you that I have a Telegram channel where I conduct trading sessions and provide exclusive signals every day except on weekends. There is also a free trading robot for Pocket Option that can trade on its own without your involvement. You can see the results from yesterday's trading session based on his signals. Links to the robot and the Telegram channel are in the description and comments under the video. Wishing everyone good luck and successful trades.